Hi, everybody, and welcome to Happy Harvesting. This is part of Crown Wealth Management's Simply Put series, and today we're going to be talking about Roth IRAs and how to keep the tax man away. As always, today's video is brought to you by Crown Wealth Management, LLC. Our phone number, 888-495-5566. At the end of the presentation, if you have any questions, that's the number to call to get them answered. So first up, let's talk about taxation. In our office, we believe that taxation is the most powerful threat your investments have ever faced. You go out and you earn your hard-earned money, and guess what? They tax it. You've got to spend your money, and guess what? You go spend your money, they tax it. You try to do the right thing and you try and save some money for the future. Guess what? They're there to tax that as well. And none of us can avoid death, but guess what? Uncle Sam may have a parting gift for you on the way out the door. He might tax you on the way out the door as well. Sound fair? I don't think so. So when you think about the devastation that taxes can have, let's look at where you think future tax rates may be headed in the next 5 to 10 years. Do you think taxes are going to be lower in the next 5 to 10 years than they are today? Do you think they're going to stay at the current levels? Or do you think taxes are going to be higher in the future than where they are today? I'll let you in a little secret. At Crown Wealth Management, we are preparing our clients for higher tax rates in the future. Now, at Crown Wealth Management, we believe that your family should have a few simple goals when it comes to your retirement. The first is keep your money. The next is give less to the government. And lastly, protect yourself from rising taxes. We believe in paying our fair share, but we certainly don't believe in paying any more than we have to. Those are simple goals. We can show you how to keep them. Most importantly, we do not want to let taxes devour your hard-earned money on your retirement savings. So we're going to take a look at the impact of taxes on your retirement. So to do so, I'm going to tell you a little story about two farmers. These farmers were twin brothers and they had competing cornfields. Now, Farmer A decided that he wanted to take a deduction now on his seed so that when his crop grew, when he went to sell his corn, he would have to pay taxes on whatever corn he sold. He wasn't concerned about the taxes in the future. Farmer B thought it might be a little bit wiser to get taxes out of the way. He believed that his crop was going to flourish and he was going to sell a whole bunch of corn. So he didn't want to have to worry about what taxes were going to be in the future when he sold his corn. He wanted to get the taxes out of the way now. So let's see how that worked for both farmers. Now, this is the same way it works for you and I when we're choosing between a Roth IRA and a traditional IRA. In a traditional IRA, which is the same route that Farmer A took, we get a deduction on the seed. So we don't have any taxes due. In fact, it reduces our taxable income when we put into a traditional IRA. And the money gets to grow tax deferred. So we don't have to pay taxes as it grows. But when we go to pull the money out, and when Farmer A goes to sell his corn, guess what? He has to pay taxes just like you do when you go to pull out of your retirement account. Is that the right thing for you? I don't know, but let's look at the alternative, which is a Roth IRA. Now, when we compare the Roth IRA to the traditional IRA, and we're looking strictly at the Roth, they're both retirement accounts, but they have some severe differences. First up is the seed money, your contributions. When you go to put the money into a Roth IRA, you do not get a deduction when you put your money in. But it grows the same way as a traditional IRA. You don't have to pay taxes as it grows. But the most important part is when it's the largest amount, when you go to harvest the income, when the farmer goes to sell his corn, you don't have any taxes due. So you and Farmer B don't have to pay taxes on the biggest amount. That's pretty important, and that's pretty powerful stuff. So when it comes to retirement and reaping your retirement rewards, what kind of farmer do you want to be? Do you want to be like Farmer A that got a small deduction in the beginning, but when he went to sell his corn and when you go to reap your retirement income, you have to pay taxes? Or do you want to be more like Farmer B and get the taxes out of the way on the seed, the smallest amount, so that when you go to retire, you don't have to worry about taxes and you can enjoy a tax-free retirement? Of course, as simple as we like to make things, things can often be confusing. So if you want to learn how you can reap your tax-free retirement rewards, we can help simplify that for you. Call 888-495-5566 now for a free conversation on how Crown Wealth Management can help you reap your tax-free retirement rewards.